Boom. We should be alive, ladies and gentlemen. I thought that this would be fun. And because I don't have my normal setup, give me the thumbs up if things are working. That'd be great. If the sound sounds good, do that as well. Okay, so if you're watching the markets live right now, FTT has dropped around 20%. And I actually think that there's some game theory behind this. I did not factor this thought into my mind earlier, although I did touch into the topic. So let's start off on this. Alameda Research is one of the largest market makers in the ecosystem. We've got a few other, GSR, Wintermute, Asheron Trading. You can go down the list, Flowdesk. For those of you that don't know, they're proprietary firms that offer liquidity on either sides of the trade. And Sam and Caroline Capital had said to CZ that they were happy to buy out all of the tokens that CZ had. Now, this is where it gets interesting, and this is what I think is actually happening right now. If CZ and Sam are having this argument, and Sam and FTX decides, well, you know what, wait a second, we just told these guys we'd buy it all back at $22. They're going to cause all this FUD online, which generally more people will want to short. They'll probably pile into that idea, be like, oh yeah, CZ is going to sell all this. Now, great for the shorts. The short position would have done really well here. So what I think happened, and we actually are starting to see signs of this, is right here. Yeah, face share. So I think that should work. So this gentleman shared, it looks like FTT or FTX has removed all of its liquidity for FTT. They stopped providing exit liquidity. So basically what this in short would mean is that if you wanted to really screw CZ over for making such a public announcement and not deciding to do an over-the-counter deal with FTX, you could do two things. If you remove the liquidity, FTT will drop as it just has. And then CZ would be selling into lower and lower portions because there's less and less liquidity on the market. We've talked about how market makers and how liquidity adds volatility. So if you want more volatility, just remove all the market makers so that CZ can no longer sell the FTT at the higher price that the market maker was willing to provide. Now the market maker was happily chewing it up for the last few weeks. All of a sudden, right here, as you can see, that liquidity was taken off the markets. You had a very tight liquidity band. Boom, 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 tight. This, you can see this yellow here is the tight liquidity band the market maker was offering. And all of a sudden they just took the floor out. So they basically said, okay, cool. Well, we're going to start putting our floor back down near $12. Go right ahead, CZ. Sell your FTT to us at an even cheaper price because I'm sure they want their own assets back. And at the same time, make it look like CZ is the bad guy because now the whole market is taking a hit. When the market moves and the market maker decides to move liquidity like this, it's going to move everything. There's a reason why the market moves all at once is because the market makers are effectively working in tandem. And if there's a big gap in liquidity all of a sudden, everybody else has to rush to try to remove their buy and sell orders to make sure that they're not losing money on the spread that they were originally creating through that liquidity space. So this seems like a gameplay to me where Sam and CZ are basically fighting publicly, and now Sam is screwing over CZ. Now, not like directly, right? Because they would get in trouble for that. That would be called market manipulation. Actually, you could go to a fairly long length to say that what CZ has done is actually some form of market manipulation. The idea like publicly making statements about their buying and selling. I don't know exactly the regulations around that, and every country's regulations vary drastically, but most people are going to be thinking, hey CZ, why are you doing this? Why didn't you take up Sam's offer and not disrupt the public markets? So now CZ looks like the asshole for the one disrupting the public market, and Sam and FTX get to buy all of their FTT at a discount of 20% instead of the $22 that they were willing to pay, that their market maker, again, was originally holding this spread at. If you look at the spread, they were holding the spread pretty much flawlessly up until about a few hours ago. So as soon as they remove their liquidity, again, the price changed dramatically, and then that's what you see in the markets. So we'll go over and see what that looks like on our trading view chart. Red across the board, everything down. Matic down 9%, Algorand 3%, Link down 3 to 4%. FTX or FTT again down though the biggest percent. And again, I would wager a bet that this is specifically due to the market maker just removing the bottom of the floor, which they can do. And now that's the new floor for now. But look at the top part of this. Look at the top part of the FTT liquidity here. The band jumps back up all the way to 34, 36 now. So they were holding it in a nice, really tight area. And you saw that move up to $26 this last week. So I suspect that once they've gotten rid of all of their FTT at this lower price and Sam gets a much better deal on the FTT that they were willing to buy at $22 because they already had their original market maker there. Now Sam makes CZ look like the bad guy, gets to accumulate his FTT at an even cheaper price than the market maker was originally holding the price at, and then you'll see the price jump back up. Now, the other thing I thought that was fun is actually here as well. So for the longest time, FTT has been forming what appears to be a nice new trading range. Now on the daily here, let's get rid of this and bring this out a little bit more. One of the things we're always looking for in reaccumulation patterns is the final spring. And final springs are usually brought out for a number of reasons. It's usually some type of leading indicator in the FUD that does that. And the spring, actually, this could be it right here. It's a massive amount of volume coming in, and this is the price drop. Now, here you have a significant, let's see, here's this other price spread. We'll just kind of roughly draw it, and here's the equivalent volume, supply, and signature that it took place there. So now let's measure both of these, and we'll do it from a measurement standpoint. So let's bring out our measurement tool. It's been a while since we've done a live video with you guys. I thought it'd be fun to kind of go over this as a perspective learning lesson. So we've got a spread of around 34% for this market. Boom, around 34% there, and a spread of approximately 37 to 38% there. So here we're actually, so if you're doing your Wyckoff studies often, not always, but often, your secondary tests throughout the trading range will have an equivalent to the spring in terms of volume, which is what we're seeing right here. So I'll point that out with an arrow so that it makes a bit more sense. So this volume signature here and this volume signature here are effectively equal, and the price spreads are pretty much exactly the same. You have a little less price spread so far today that we have on this previous secondary test. So this actually looks like a really beautiful market structure, and it fits the qualities that we're looking for in a spring. Now, as I mentioned in my video earlier, I don't think that FTX is illiquid. I don't think they're going to go insolvent. And more, I believe that their removal of liquidity here is actually to do two things. Again, allow it so they can buy their FTT back from CZ at even cheaper because they offered to do it at the market maker's price floor. And then B, also make CZ look like the bad guy for causing this big disruption in the markets. So here's another one. Byzantine General says liquidity on FTX got pulled from all the market makers. Look at that, all the market makers that have been that have Alameda as an MM is getting kind of scary. I don't think this is a scary thing. I think that they did this on purpose. This seems like a purposeful act to kind of screw CZ over and for shooting himself in the foot for doing a public trade. Why? First off, it doesn't even make any sense. Like, why would you want to publicly trade something, make a note about it, and then say it's not about hurting other competitors? It's really horseshit. Like, CZ here is just talking, just spewing horseshit out of his mouth when he says that. So they pulled liquidity from Bitcoin, Ethereum, and other spot pairs too. So this is interesting to see Alameda remove liquidity from multiple markets all at the same time. Again, you have to remember that Alameda is one of the largest market makers in the ecosystem. They're up there with some of the best, right? And it says, what does it say here? FTX got pulled from all the markets that have the Alameda market maker trade, as far as I can tell. Okay, so you may have seen a few market makers are back online across the board. This has been very fun. So let's take a look back at the charts and see if we can notice any of these changes within the regular ecosystem. So they said that they pulled liquidity from both Bitcoin and Ethereum. So Bitcoin down 2%, Ethereum down 3%, Solana down 9%, Wu Trade 4%. Everything across the board has dropped because of that massive removal of liquidity. Now again, FTT did get hit the hardest, but we know that's what CZ was trying to sell. So I think Sam's probably, and FTX, well, it's not Sam specifically. As companies, they're not allowed to do that. It would be someone within the company that's decided to make these decisions. Sam probably doesn't even have a vote in it necessarily. So I suspect we'll get this as a spring. Now, if I'm wrong here, if we don't get this as a spring and we do something like this and we can't close back above the box, oh dear God. What we need to remember is that we are in dangerous territory here. This idea of the Great Reset is one of the scariest things I've ever seen. There are much bigger forces at play. We shouldn't be mad at Sam or CZ. We should be much more worried about central bank digital currencies and the people who are willing to manipulate the scientific data to lie to us at scale about the safety and effectiveness of their current banking regime. Because it's neither, the banks as we know today are neither safe nor are they effective for your capital or likely for your well-being. So there's a much bigger war at play here. I think we're witnessing some of the small guys duke it out with each other. But nonetheless, if we start to see strength go back into the old ecosystem, it could be devastating. You do not want to end up under a tyrannical control of a monetary system that can limit your bank spends depending on your reputation score about the tweets that you liked or didn't like effectively. If you don't like, or what, that's all horribly bad. So, well, I think we're focused on some of the small guys duking it out, paying attention to the larger story of what's going on with the central banks is probably more important. But again, Matic here has dropped 10%. So this, when you move liquidity, it affects prices across the board. It will not just affect one price. A lot of the time, especially if you go to the automated market makers, let's actually do that for fun. And let's just kind of keep in the trending site here. Yes, so they just removed their market. Yeah, this is funny. It's not, FTX is not insolvent. Again, when they remove liquidity like this, I think it feels like it's on purpose. Let's see what else is going on. Maybe we'll jump into the chat and see some of your guys' thoughts on this as well. Shout out to Mongo for sharing some of this. Loop says they're both dirt bags. I'm not going to argue with that. They're both making the market look like to the regulators it would need more regulation. So it's not a great move. Removing liquidity, isn't that a rug pull? Great question, Philippe. Technically, yes, but no, because they're not the only people that manage liquidity for FTT. I would imagine that Binance also owned FTT liquidity on their side. So it forced them to sell into their own market makers' hands. So now a bunch of the market makers that function on Binance are probably not happy with CZ either. So this is a very smart gamified play, I think, where CZ is going to end up looking like the bad guy. Yeah, I think CZ does look like the bad guy here to the general public, because CZ was given the opportunity to effectively buy his assets back from Sam at $22 without disrupting the market price. So yeah, again, technically they both look bad. I don't think either of them will come out of this looking great. Two bad guys, yes. That's effectively how it ends up. Paul Bogo says, but that's all they hold. Pretend FTT in this pro-government is weak. CZ looks like a hero. You know, I think Sam again fell into an echo chamber. When you're good at something and you start to be more successful and you surround yourself with people that basically become yes men, it's much harder to navigate the conversation of what you're getting wrong, because people won't check you. You have no real critical advisors. The reason why I was trying to be like, hey Sam, come do mushrooms. Sam needs like a spot check on himself, because he's surrounded by people that only give him the answer that he already had, which is not a great thing. I guess it's kind of like Greta Thunberg to some degree, right? Like, it's clear that Greta doesn't really know what's going on. She's been taken advantage of by that groupthink circle. Now, we could make arguments about how much of that is founded on ill intentions or knowledgeable people that realize they're feeding her garbage, versus the people that, again, there's this quote. It says, the road to hell is paved in good intentions. And I think for some reason, on average, people assume that their good intentions are not the ones that would pave the road to hell. They go, hey, my good intentions are somehow better than all the rest who have come before. So they make this fallacy in their choices that lead them down this rabbit hole. So it may not always be based off ill intent so much as it is around good intentions naturally paving the road to hell, because of the arrogance and stubbornness of those who believe that their intentions are better than others. It's a really interesting philosophical thought, I think. And a lot of people probably get that wrong. A lot of people probably have, at least in the past, have paved the road to hell for many people in that good intention. And it's very difficult to navigate. I don't think I can navigate it. I'm not going to try. It's one of the reasons why we don't try to do anything like that. The closest we do is like, hey, we should do some gamified charity. Let's play around with how we can do better as a corporation by giving back through loans to entrepreneurs. But in terms of like doing good for climate change or promoting like the NHS or the CDC, like, it's very clear that you're probably making a mistake at that point. So yeah, I think it's a very difficult philosophical conversation, because the reason why we have a quote like the road being paved in good intentions, because it's happened so many times before. Okay, let's take a look at your guys' thoughts and questions. What about FTT, SEC rumors? I thought I heard that SEC was starting to look at them. They're great at their audits. Again, I know some of the team, they're fantastically brilliant people as individuals. Again, I think it's when you get the group think and you end up with an echo chamber, that you don't get critical thinking in the direction that you're going, because you're assuming that those good intentions are capable of overcoming the ill. And yeah, that's never boded well in any form of history. So I think Sam has ended up on the wrong side, appears to be ending up on the wrong side of history here through that hope of good intentions. Sam is the bad guy in all this, and he sided with the 0.1%. Yeah, the World Economic Forum is clearly a criminal organization at this point. The mother weffers, as some of us might call them. So yeah, that's a very difficult one. Everyone is the hero of their own story. That's great. Something about if you play the game long enough as a hero, you eventually become the villain. There's another one there that rings true. So I wouldn't bet it. I wouldn't bet that people don't make those same mistakes over and over and over again, even though we have the history lesson to try to teach us that. I don't think FTX is insolvent in any way. They weren't playing a cup game like Celsius was. They don't measure any of the assets under management of the people, whereas Celsius was basing their treasury off the assets that other people had given them. FTX doesn't do that. They have never once included that in their treasury. So again, you can do that. You can do the research on that. I know that's not the case. Okay, so Chulio says, do you have a summary of the situation? All I know is FTT is apparently doesn't have liquidity backing, and they have a lot of soul to try to prop it up. So it's not that they don't have liquidity, it's that they removed their liquidity. So this is a much different conversation than they don't have the liquidity. The liquidity is there, they just removed it. So I'll go over kind of how this works. We'll use Uniswap as an example because it's an automated market maker. So for most of you, this will be the closest chance you get to be your own market maker. Let's look at the tokens and let's look at the pools that are out there. Okay, so we'll go to screen share. Okay, so this is Uniswap. So this is a question around, let's do a little bit of a deep dive because this is around liquidity. What is a market maker? We'll do the research together. So market maker's definition, let's go Seeking Alpha. Investopedia is one of my favorites to ask these questions. Market maker definition and how they make money. Market maker is a firm or individual who actively quotes two sides of markets in a particular security, stock, or in this case, cryptocurrency, providing bids and offers known as asks within the market of each size. So an automated market maker is this unique digital function that allowed you as the individual, if you wanted to, put up your token and USDC or Bitcoin or Ethereum or Solana or DAI or Chainlink or Hex or anything else that you wanted on the other side of your token. Now, if you used Ethereum, for instance, and Ethereum goes up, your token's value will also go up because of the way the market maker works. Very unique function. If you place it with USDC and Ethereum and Chainlink and Uniswap token on either side, you actually end up getting a better rounded price, which is why when the market moves, it all moves at once. It's why Matic is currently down 10%, FTT is down 19%, is because all of the market makers are actually connected to each other in one way, shape, or form, because you don't usually just have one thing on the other side of the trade, you have all things on the other side of the trade. So if you were to go and pool your tokens, USDT, for instance, let's see if we have a, do they have a Solana on this one? Stake Solana. Let's actually go, I don't think they have FTT here. Yeah, here we go, FTT. Yes, okay. So here's the FTT price on the automated market maker, and as you can see, the market maker was keeping the price at exactly $22 for quite some time. We're right in the range of $22, and again, when we go back to the Alameda page that we were looking at, you can see that at least for the last few hours, the market maker had kept it in this range between $20 to $26. So as the market makers remove liquidity, there's no one else on the other side of the trade, so the price can just basically go into free fall. So let's take a look at the, can we see the pool total locked volume? 4.86 million. So this is, let's go with a longer 1 year trade. Okay, so here we go. Here's the 1 year of FTT. Actually, in the 1 year, it doesn't look like it's dropped a whole lot. It's too bad we can't see the pool or the staking options being removed here. More analytics. Maybe we can dive deeper. You used to be able to dive deeper in Uniswap here. Okay, yeah, so here's the pool. So here's, you can see FTT with Ethereum, USDT, USDC, and USDC. So the FTX token on one side of the trade and the Ethereum on the other side of the trade. So let's take a look at the total total TVL, and all of a sudden, swap. Let's look at removals. You should be able to filter by removal, liquidity. Okay, wires. It used to show. Okay, removes. Here we go. Okay, so here you can see. Remove FTX and ETH, which means that they're taking out one side of the FTT token and the other side of Ethereum. So they took it out around 1 Ethereum, 4 Ethereum, 0.6 Ethereum. So people were starting to remove their liquidity because they could tell that they would likely be hitting an impermanent loss, and them being part of the market maker wouldn't bode well for them over time. So you see a lot of big pieces of the liquidity had actually been removed even from the automated market makers in the last 12 hours. Look at this, 12.7 thousand Ethereum, $20.5 million of Ethereum and FTT token were removed exactly 1 day ago. That is, see, this is what I was looking for, a big player removing, and all from the same account, mind you. This FE88, maybe I'm incorrect here, but I believe this is all from the same account. It could be just because of the pool contract. Would have to double check on that. But 12.7 thousand Ethereum, $20 million of Ethereum on one side of the trade, and $20 million of FTX token on the other side of the trade was removed. So when you do that, there's a lot, the price can drop dramatically because there's no other Ethereum or there's no other USDC on the other side of this trade. So we'll go a little bit further into the market maker here just to kind of, again, go away with the key takeaways here. So quoting from an Investopedia, a market maker is usually an individual participant, a member, or a firm. In this case, we're looking at Alameda, Wintermute, GSR, and a range of other market makers that are very popular. They do the same thing for both FTX and for Binance. They knew this was coming and they think to themselves, well, great, let's remove our liquidity, the price will drop, and FTX will be able to buy FTT back at a discounted price because FCZ is what they're thinking. So the market maker provides market liquidity and depth while profiting from the difference of the bid and ask spread. Brokerage houses are the most common types of market makers, providing purchase and sales solutions for investors. Market makers are compensated for the risk of holding assets because the security's value may decline between its purchase and the sale to the other buyer. While brokers compete against one another, specialists post bid and ask to ensure that they are reported accurately. So again, I highly suggest reading more into market makers. It'll help make this conversation make more sense. So if they removed their bid and spread ask, then the price is going to drop. And now they're going to be able to buy FTT at a reduced price here. So that's kind of the rough address, I think, of what's happened so far, is that they said, well, great, again, let's make this look like CZ's fault. Let's get our FTT token back at a discounted price. It's going to tank the market for a minute. We've got, again, Matic. Matic is down 12%. Yeah, red across the board. Solana's down 9%. Bitcoin down almost 2.3%. And what's interesting is that it looked like it was more than just Bitcoin. Yeah, here. So the Byzantine General said Haska trades as they pulled liquidity also from Bitcoin and Ethereum. And I bet you would be able to find across the board that they were pulling liquidity on purpose. So again, this is a very unique gamified play here that's going on. So this guy is wrong. Whoever Duo9 here is wrong. It's not how Alameda Research uses their capital, but we won't even get into that. Yeah, it'd be better to have more data on the market maker side of things itself. We used to have market maker bid and ask spreads. I wonder if you can find them. Let's see what Twitter always has some good insights. Alameda is selling sold to buy FTT because CZ is buying FTT to buy BNB, or selling FTT to buy BNB. Let's take a look at BNB price here too, and then we'll take a look at some of your guys' thoughts and questions. I'm gonna actually have to add BNB here. BNB market cap. We'll just go strictly crypto, Binance coin, and let's actually look at both. Yeah, so Binance has dropped, BNB token here has dropped around 2%. So not pretty much every aspect of the market is in red here, aside from the traditional marketplace. But yeah, across the board, 7, 11, 18 for FTT, 6% for XLM. So you can see that when the market makers move their liquidity, it affects everything. Again, a perfect example was here when we were on Uniswap, is looking at the relationship to liquidity across the board. It's not just one token that's pooled together, it's many tokens. So here, let's go FTT. There's the FTT token. Let's look at its token pool. Yeah, so you've got USDC, USDT, and Ethereum as the main pools effectively. But often you'll find across the board that those change. You can have FTT against your token, whatever you want. If you put up FTT on one side of the trade and the token that you just made up on the other side of the trade, then they would have this relationship within value. I mean, I actually highly suggest spinning up an ERC20 token. And it's also important to remember that BNB is no different than FTT. It's exactly the same. It's a token that's made up out of thin air. All they did was add liquidity to the other side of the trade so that you can buy and sell the BNB token. So there's fundamentally no difference between the value of how FTT or BNB came into fruition. They're both effectively made out of thin air. I mean, we could even make the argument that the US dollar is basically effectively made out of thin air too. So it's not really a huge differential between those two. Whales playing whale games. Yes, that's what it appears to be. A bloodbath, yeah. Again, I think that the game part here was Alameda will be able to acquire their FTT at a cheaper price than the $22 they offered to pay. And then CZ looks like the bad guy for not just taking that deal and instead disrupting the market and overall the market makers. Because if Alameda removes their market maker, that's a big deal. They're one of the biggest out there. Again, I think Wintermute and GSR are the biggest, so I suggest kind of checking that out. But that to me, I think, would also give CZ a bad name, because then the other market makers would be like, dude, why didn't you take the OTC deal? Like, you're screwing all of us over now. Instead, we were providing like a nice stable marketplace for the most part. So that's a difficult one. Yes, Blood Moon Eclipse. Wendell, yes, that's Iris. My girlfriend has been trying to tell me. She's like, the lunar eclipse is coming. It's a full moon on Monday. Well, I'm not going to argue with it this time. Stick says, hey, Tio, hope everyone is having a good evening. Yeah, I'm having a great time. It's fun. I hadn't done a live stream in a while, so I thought this would be the great example. Or a great reason to go online. And I thought the market maker conversation it's actually pretty difficult to bend your mind around, especially because I didn't understand it for the longest time until we had the Arcane Bear token, and we're like, okay, we put up $1,000 and we put up 1,000 Bear token. Now Bear is technically worth $1 a token, but there's only $1,000 of liquidity. So if I start selling Bear token, well, I could sell it to infinite nothing. Because if you start buying it, well, it's going to go up very quickly because there's only 1,000 of each thing on either side of the trade, right? So when you have really thin liquidity like that, the market is super volatile. I tried to explain this to over and over again, but it's hard to grasp until you do it, once you put your own hands on it. Now, we use the Arcane Bear token as a rewards token for our private members. We just give it away. We're like, hey, we're going to do a giveaway today. We're going to give you X amount of dollars in Bear token. We hold the other side of the trade. So if you sell that Bear token, it's basically us giving you money. It's like a marketing gimmick, effectively. Let's take a look at a few more thoughts. Red wave. Yeah, this is actually the red wave that all the Republicans were talking about. Is happening right now. We're witnessing it. Let's scroll back up here. Let's take a look. Wow, yeah, Bitcoin now down 4.4%. Amazing. Yeah, so now we're seeing the effect across the board of the removal of that liquidity. Yeah, I think the gamification process here make CZ look like the bad guy, because now all the retail investors go, bro, why did you sell your shit on top of us for everything, right? Because when you do that, it's a big move. $500 million to anybody is a huge amount of money, unless you're a corporation. That's a huge amount of money. Yeah, well, you as an individual usually don't have that much money. Sometimes you can. I know a few people that do, but often it's usually the corporate or the holding company that holds it for the individual. It's kind of separated. We call them blind trusts. There's a few different ways to do it. Anyways, let's take a look. But FTT at 18%. Let's go back to the FTT token. Yes, and let's see how it's faring so far. No new liquidity added to the trade, but again, this would represent the perfect spring. So we'll see how it goes. We'll know in the next 24 to 48 hours if as they add liquidity back to the market. Oh, actually, sorry, here we go. There you go. Now you can see FTT is down at 18%, at $18 right now. This would be the perfect spring. It's the right amount of fear. The market maker moved their liquidity so they're not getting dinged on the spread. CZ is selling into his own pockets. The market makers are upset with CZ because they didn't take the over-the-counter deal. Yeah, billionaire wars, basically. This is like when I watched Stephen King complain about a $20 price tag. It's like, you motherfucker. What's wrong with you people? You're not broke. Quit, shut your goddamn mouth. Okay, let's go back and look at a few of your guys' thoughts and questions. You guys always have great insight here. I'll also do some Twitter hunting to find out if we can find any more useful data. If you have any useful, fun data about the market maker situation that's going on right now, let me know. Let's see, where's my chat screen? Here we go. I love how we always get, at least we get cheap crypto. Great way to look at it. What do you think about the Sombra network? Never heard of it. Victor Benjamin says, I just charted Bitcoin in 2014 and 2018, and in the midterm elections, Bitcoin dumped. I expect a dump soon. Well, it just dumped around 6% because everybody took liquidity out of the market makers, or at least some of the biggest market makers did. Jim Cramer's tweet 14 hours ago, still not too late for them to really implement my crypto vision. I'm a big buyer of FTT token at these levels. Nice, Wendell. Sammy sell BNB and check selling FTT. Check CZ selling FTT. Anyone else streaming Anti-Hero at the moment? I've never heard that song, but I think that's probably a funny joke. Okay, let's scroll back here and let's read a little bit more about the market maker, because again, I think this is a great time to kind of go over the importance of understanding how the floor of the market is held up by those people who are holding liquidity to want to make money off the bid and spread. So let's go this way. Each market maker displays buy and sell quotations for a guaranteed number of shares. Once the market maker receives an order from a buyer, they immediately sell off their position of shares of their own inventory. This allows them to complete the order. In short, market making facilitates a smoother flow of financial markets by making it easier for investors and traders to buy and sell. Without market making, there may be insufficient transactions and fewer investment activities. A market maker must commit to continuously quoting prices at which it will buy and or bid and or sell and ask for securities, and in this case, crypto. Market makers must also quote the volume in which they're willing to trade along with the frequency and at the time they quote the best bid and offer prices. Market makers must stick to these parameters at all times during all market outlooks. When the markets become erratic or too volatile, market makers must remain disciplined in order to continue facilitating transactions. So, market makers versus specialists. Many exchanges use systems of market makers, each competing against one another to set the bid or the offer price in order to win the business of orders coming in. But some, like the New York Stock Exchange, have specialist systems. The specialists are essentially loans or a loan and designated market makers with a monopoly over the order flow in a particular security or securities. So again, this would be the likelihood of what happened with FTT, is that Alameda was actually kind of the loan or specialist within this market. Because the New York Stock Exchange is an auction market, bids and asks are competitively forwarded by investors. The specialist posts these bids and asks for the entire market to see and ensure that they are reported accurately in a timely manner. They also make sure the best price is always maintained, and the market trades are always executed, and the order is maintained on the floor. The specialist must also set the opening price for the stock each day. So in our case, that just continues to move. Boom. Okay. So again, I think the important part here was the witness of the removal of a massive chunk of liquidity on FTT, BTC, ETH, and a few other spot pairs. Let's see. See if we can find any more data on the market maker. Okay, we'll go back to the market here. You guys can still see the screen. Let's see where we're at for everything. So yeah, across the board, again, everything's affected by the market maker. Large drops. Again, if you remove liquidity, especially if you remove liquidity on Bitcoin, we've talked about this before, 5% drop on Bitcoin. Wow. So this is actually a really unique play, because if they were interested in acquiring more Bitcoin, they're going to be able to do it at a cheaper price here too. Now, there's probably some speculation of, are they selling Bitcoin to try to defend FTT? It could be the case. If they are FTT-based loans, I know there's some conversation around that, but I don't think they were the majority of their loan tickets. Let's see. What's Sam Price doing? Take profits. What profits? Immutable X. Actually, let's go to, here's one I always like. For those of you, Dune Analytics always has some fun as well. Let's go to the Dune Analytics dashboard and take a look what's going on in Dune. Oh, sorry about that. Okay, here we go. Straight data from Alameda, FTX, FTX, FTX. So on my screen, you should be able to see FTX exchange, ETH exchange, deposit. What's the date here? Inflow and outflow. So definitely a lot of people started to take capital out of FTX. Again, in our video earlier, it's just always helpful to remember, not your keys, not your coins. If you don't hold them in cold storage, they're not technically yours. They're always risk at third-party liability. Although I don't think FTX is insolvent, you can definitely see that some people were not willing to risk that, and they've removed their Ethereum from FTX. Let's take a look what else we got. Alameda and FTX tracker, FTX wallets, total ERC20 balance, $1.8 billion. Now I don't know where they're getting all this data from. Alameda, total ERC20 balance at around 75 million. This stayed pretty flat from the 1st to the 7th, so nothing noticeable there. Total transactions, again, we did see people removing a net change of around $200 million left FTX since this conversation kind of started. Alameda's largest holding is FTT. Amount, well, the price is definitely wrong there. 978,000. See, something's off around this. Largest holding of assets is only 21 million. Yeah, that's not right either. The downside is you can't trust data that you get from the internet. Like I can just tell that that's not right. Let's see, FTX overview. Let's see if this has any better data. FTX exchange and stable coins, pretty standard, nothing out of the ordinary. FTX exchange assets in the last 24 hours. ETH amount, USD. Yeah, I don't know why this drops off. Maybe this is just the timer. Wow, if this is the case, it looks like you had almost $1 billion removed from FTX in the last 24 hours. Wow, that would be fascinating to see if this was true. Again, I don't trust some of this data. It's hard. Let's see, where did 6 Degree get it from? Dedicated on-chain service analysis. Where are you getting the metrics from? A very interesting business seeing a war between SB and CZ. We don't know the truth behind the screen, but we surely can see how the FTX inflow and outflow volumes are going. There was a net outflow of $250 million in stable coins, or $278 million, $2 million. Wait, is that 2 million ETH? From FTX in the last 72 hours? Liquidity in FTX hot wallet is drying up. FTX token distribution is interesting. Top 10 holders hold 92% of the shares. Yeah, Alameda you generally want to hold as much as your company as possible. We've gone over this in many conversations before. Actually, Monster Energy Drink is a great one. Let's go actually look at Monster Energy Drink. So one of the best performing assets of all time is Monster Energy Drink. So this is actually a really fun example of why you want as much ownership in the hands of the founders as possible. Where is Monster? I swear we had it here. One sec, ladies and gentlemen. I'm trying to find Monster Energy Drink. MNST. Okay, there it is. Okay, so you're gonna love this. Monster Energy Drink is absolutely sexy. This is one of the sexiest charts you'll ever see in life. This is what only up looks like, and there's only one way to get here. It's by always having ownership under one owner. So for those of you that don't know, Monster Energy Drink was created back in the early 1990s, and it's been one of the best performing assets of all time. We don't even have all of its data, but here it started in 1986, had a big run up as people thought it was going to be able to beat Coca-Cola. It came down, saw the spring. So really you see around, what is this? Price spread here. Actually, let's go from the top to the bottom, or from the bottom to the top. It'll give us a better spread. Okay, so The entire accumulation range was approximately a 23x, which is huge, by the way. So you had between the years of 1986 and 2002, the Monster Energy drink went through a 23x accumulation range, which is also, again, why we suggest reading books like 100 Baggers, and the importance in understanding the long-term vision of why, like, at least for myself, our kind of coffee can theory is the most effective. Is because sometimes you might see an asset drop 80%, which is for Monster Energy drink was a 24x, before it subsequently, at least from the bottom here, went up 900,000%. So this is a 900,000% growth in Monster Energy drink from 1996 to today. And since 1999, Monster Energy drink has never had a drop, basically. It's only ever gone up. And the reason they were able to do this is because it's owned by only a few people. Monster's shares were never diluted to early investors. There was no venture capitalists, it was just the founders. So they've been able to just subtly dilute their shares by selling into the open market year over year. And they've seen a 900,000% from the bottom of 1996 to the top of where we are today, or at least 833,000%. That's fucking amazing. This has been an only up chart brought to you by Monster Energy Drink. They got away with this by only having a very small few people holding the token ever. Other thing that people don't understand is that if you just only hold a token, if everybody always only decided to hold, the price would go up. And this is what we saw with the conversations around GameStop, is that everybody was buying. Everyone wanted to keep buying. So the price just kept going up. It wasn't until they stopped people from buying that took place. If you guys spam the chat with stuff, I'll just gonna hide you on the chat from posting anything. It's just the way it goes. $85 billion in market cap lost in the last 24 hours. Let's go to CoinGecko. We'll take a look. Shout out to CoinGecko, our favorite place to get data. 24-hour volume, $99 billion in volume in the last 24 hours. Look at this, straight down for Bitcoin, for Ethereum 6.3, XRP, everything across the board. Down, 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 down. The only time, I actually see some up for Shiba, but that was only temporarily. Tron is up 24% OKB. But yeah, down everything. The market maker, as soon as they remove liquidity, pretty much affected everything. Kronos, Monero, still holding somewhat stable. Algorand, you can see that they're not totally directly connected. Let's take a look at FTT here. Let's see what data we can get from CoinGecko itself. Boom. So there's the drop. There's the removal of liquidity and this new floor of around $18. I assume, again, that this is just a play to accumulate. Let's see if we can find any more data here. Let's see what the market cap drop. So it says it dropped from 3 billion to 2.4 billion. So it's approximately $600 million. You know, this is actually interesting. CZ only had $500 million to sell anyways. So that's around the right price, and at least in terms of market cap drop from his individual selling. Take a look at a few of your guys' thoughts and questions here. GameStop FTX partnership. Litecoin trying to hold on to a little of those gains. FBV, Sam Bankman-Fried and Gensler gimping over Felon Yellen's house. Yeah, I'm not going to try to make positive light of any regulators. They're a shitstorm. We don't need them. They're basically useless. They get in there in a way of like regulate you against the best investment of the last fucking decade. Yeah, it just makes no sense. It's not a positive thing. Regulators are the fucking garbage. We'll go back. Let's see if we can find more. I want to see if we could find more data. I wonder if we have liquidity. I don't think we have any liquidity charts on CoinGecko. I used to have another company we like to use for liquidity, but we stopped using that. So let's see. Only perpetual futures, open, tether, spot, market cap, futures, linear futures. Nothing will show me. I don't think I will have a version of the liquidity on TradingView here. It's too bad. I wish I had that old market evaluator now so we could see where the market makers were sitting. Maybe I'll try to bring that back up again in the next month so we can take a look. Well, anyways, this has been a ton of fun. Thanks for joining us. Again, I want to point out that it looks like this was a coordinated move for FTX and Alameda to buy FTT back at a discounted price, in the same time screwing CZ over. You have to remember that Binance is not their own market maker. Binance uses Wintermute, they use GSR, they use Alameda to get their prices. So I would imagine that a lot of these market makers are probably going, UCZ, you should have taken that OTC deal. Now we're all having to take a hit. So yeah, I think that this was kind of a coordinated conversation around how do we acquire the FTT that CZ is going to sell at the same time giving his image a bad batter wash. I guess it's getting late. It's 11:36 p.m. here. Implied El Carmen. Let's see if Sam has anything to say. Probably not. He's keeping his mouth shut. Lawyers are probably like, don't say anything. Alameda's trending. Let's see if there's any more fun data on Twitter. Yeah. Yeah, I wanted to point this out too. It says, of all the things that give me cause for concern, FTX is getting drained from reserves from withdrawals, and Alameda is sending stables from his trading wallets to the FTX hot wallet. Is this coincidence, or are the lines blurred between these two entities more than was let on? They're the same fucking company. They just do different things. I mean, do you not like this? Sometimes I really wonder how much people do research into how business functions. I don't think that they let on to appear to know more by sharing data, but it's clearly not the case. Anyways, we'll leave it at that. I think we covered the most important part, which is the market maker conversation. Again, hopefully that was helpful for you guys. It was helpful for me to kind of go through that process the first time I put liquidity up and realized, oh shit, the market maker is such an important part. So remember, heads I win, tails I only lose a little. It's probably the best trading advice I've ever heard. This is Tio with the Arcane Bear. We'll see you guys on the next episode. Thank you all for joining us. I hope you had fun this evening watching the markets move up and down. Yeah, we'll do another live stream again soon. Let me know how the voice or vocals sounded. I'm using like this microphone thing. Makes it a bit easier. Because otherwise I normally had a big microphone. It was a pain in the ass, and the MacBook mic sucks. So leave some thoughts on how the mic sounds. I appreciate all of your guys' support. And look at this. See you on the next episode. Boom.